Hey guys, welcome to today's daily premium newsletter. The connection between significant coins marginally separated today as the currency settled down to some degree after the most recent auction. While that may be an early bullish sign for the segment, the short-term setups are still bearish for the largest coins, and the rally attempts failed near the key resistance levels. In other news, Coinbase made $1 billion in revenue last year. Tremendous increase fueled by increasing mainstream interest in both Bitcoin and competing virtual currencies that users can buy and sell through the Coinbase app and website. This is 66% more than its 2017 revenue forecast of $600 million. This has led to a demand in acquiring a stake in the company by outside investors. However, the company remains private and does not allow stock to be traded on secondary markets. Our hope in 2018 is that we continue to see diversification in this segment because having too much power consolidated into one company can be a recipe for disaster, as we saw with Mt. Gox. Remember, if you're using Coinbase, you can avoid paying any fees by transferring in money through your bank account, which takes 7 days, moving the funds to GDAX, the Coinbase exchange, and placing a limit order. Doc did something similar to this on Monday in our daily video, although he placed a market order, which would result in a 0.1% fee, but that is still much better than the 1.5 or 3.9% fees you pay on Coinbase. Weiss Ratings, the US-based independent provider of ratings and research for the bank and insurance industries, announced that it will start rating cryptocurrencies. The rating agency stated that it will issue letter grades on cryptocurrencies. Interestingly, no A ratings were given, and of the 5 B rankings, 2 are cryptocurrencies without working products. Anyone who can stand by saying that they have robust impartial ratings and then rank Dogecoin nearly the same viability as Bitcoin is pretty asinine. Remember, this is the same company that also ranked Amazon at a C+ and told readers to sell Tesla at $12. While this is silly in some respects, it's also an important step for crypto. Positive publicity, even from someone like Weiss, is still important for gaining mainstream awareness and adoption.
Hey guys, it's Doc for Ready Set Crypto. I'm looking at the top 10 here, and we're not seeing much difference over the past few days. Again, what I keep talking about is that we want to see this washout. We want to see people give up. We want to see that sign come out that says, "Abandon hope, all ye who enter here." That's honestly, I mean, it sounds Machiavellian, but this is really what has to happen for this market, this crypto market, to find a bottom here. Because otherwise what we're going to get is we're going to continue to get the little bottom pickers that come along and say, okay, is this the bottom? Here's 10,000 Bitcoin. I'm going to come in at 10,000 Bitcoin. And then the price goes up a little bit. And then what happens is the first red tick that comes along, they're selling out of the position. They're taking these little micro profits. The expression is called eating like a bird and crapping like an elephant. This is a very typical thing that a retail trader will do. Take small profits and then they will ride this thing down and take huge losses. So that is kind of what that expression means. So we're looking for something like this. We're looking for a big washout candle to the downside to get people to finally say, look, I quit, I capitulate. And until that happens, we will still keep chipping away at the bottom, and it's going to frustrate everybody sitting down like that. So it's almost like you need to rip the Band-Aid off, right? Instead of just slowly peeling it off and being very painful piece by piece as it comes off, it's much easier sometimes to just rip the Band-Aid off, get it over with. Let's get that capitulation candle to show up. Now, this will be accompanied by the worst news that you could ever imagine. All of your friends and family will be saying to you, oh, you're not trading that cryptocurrency, are you? Oh dear. Well, have you read the news? I mean, the news is going to be universally awful when we get that washout that comes along. And you will doubt as to whether or not this will survive. But guess what? We went through the same thing back in September. No kidding. So it doesn't look like it. I mean, when you look at this market, when you look at this huge rally that we had, you see this little bump back here in September and you go, oh, well, that was no big deal. That's nothing. Look at that little tiny move back there. Well, in a relative basis, this is what we're looking for, folks. This is the washout that will do it. And so we not only got the initial move down, but we got a little bit of a rebound, and then here it comes back down again, and this is where everybody gave up and said, I can't take this anymore. enough of this Bitcoin nonsense. I'm going to go back to mutual funds. And that's where they belong, right? So this is where the rallies come. Rallies come from maximum adversity. They come from skepticism. They come from too many bears getting on board way too late in the move. But look at this move here. This is what we need to see. We need to see big volume coming in here. Big volume, big washout, horrible news coming along. And that's what creates a lasting bottom. You can see the same thing happening here back in July. So it seems like every few months we have to go through one of these. And I will say that what happens is the nature and the depth of the corrective move is a direct correlation to how strong and how crazy the initial swing to the upside is. So the stronger the move to the upside, the more difficult and more complex the correction needs to be on the backside of that. I mean, quite honestly, we dealt with a move like this in silver back in 2011, and we are just now watching it break out and recover. Now, I don't think we're going to have to wait 7 years to have Bitcoin or cryptocurrency recover from this, but it would help to have a little bit of fear and trepidation come into this market. That is what will seal the fate of the bottom. Okay, so I've spent a lot of time on Bitcoin. Bitcoin is actually one of the best looking charts that we can analyze that I have ever seen, that I will ever see. Again, compared versus any other stock or currency or commodity, anything like that. Bitcoin is absolutely one of the best that I have ever seen. So I love charting Bitcoin, and it serves a great purpose as sort of a proxy for the entire cryptocurrency market, at least for now, until somebody knocks it off the throne, until some other lion comes to challenge the pride. Bitcoin is still the big dog. Okay, so let's quickly go through the rest of these. Ethereum has got a little bit of a pennant showing here. So it does have a lower high, but that's also a higher low, which means that it's vectoring into another consolidation, but much stronger than Bitcoin again. So everybody loves Ethereum. Everybody loves Ethereum. It's finding support at 1,000. Here is Ripple. Ripple's still in trouble. Still in trouble. It's got to print a higher low and a higher high to recover from here. Here's Bitcoin Cash, which is still in trouble. It's like everything else. Here's Cardano. Again, not really into charting Cardano. There's just not enough there. Here's Stellar Lumen. And this one actually showing a little bit of strength today. You can see what's happening here. You can see this. This is a series of lower highs and lower lows. And then all of a sudden what started to happen here is a higher low gets printed and a higher high. So this may be starting to reverse back up to the upside. So that is a good sign. Here's Litecoin. Litecoin's not doing anything. Not doing anything. But don't forget, it did nothing for a long, long time before it got it on and was chasing itself on the coattails of Bitcoin. Here is NEO. Now, NEO was last week's rockstar. I'll get to this week's rockstar in just a couple of minutes. But right now, it's doing a nice job of consolidating. This is exactly what it needs to do right now. It's building up a lot of energy. Here's NEM. NEM is not doing anything. And finally, for the top down, here is EOS. And this guy is doing exactly, precisely what it should be doing, which is building yet another big triangle like most other coins. But this is much stronger than most other coins. So this one is in contention for one of the ones that will leave the station first when the recovery does come. But under the category of can you believe it is, again, Walton Chain. So Walton Chain, I talked about this one last week, but I can't take credit for telling you guys to get into it at the time because I said, hey, this is a cup and here's the handle and give it a couple of days. We want to see this shake and bake around in this area to build a handle, and then we can take the breakout from here. Well, Walton said, I don't think so. I'm out of here. And we've seen this just absolutely take off. So again, we're charting this versus Bitcoin. So Bitcoin's not going anywhere. This offers, you can see just how strong this is as compared to Bitcoin. So normally we try to chart things against the US dollar because it's generally more stable than Bitcoin. although the US dollar has been getting clobbered lately. So by proxy, we should start to see coins gain a little bit in value, at least on that, just because of the weakness in the US dollar. So again, guys, I'll sign off by saying, steel yourselves, or as they would also say, gird your loins. We're probably going to have a very nasty little capitulation before this thing will finally bottom out. But it's going to be worth it. The pain of ripping off the Band-Aid will be worth it eventually as the overall crypto market recovers. That is it for today's report. Thanks for listening. We'll see you tomorrow.